In this video, we are going to be doing some Netflix analysis, ticker NFLX. If you want your own stock analysed, throw it in the comments, we'll get round to it when we can. Now what we can see is we're up around 6% on the day. Really, we just opened and started to fly. So this was on some news just to do with their ad tiers. And again, this was taken as good news. So what are the key levels we want to be paying attention to at Netflix? Obviously on this open, strong momentum for about the first kind of 10-15 minutes on the market. Why have we now started to slow down? And this is one of the main reasons I wanted to do the analysis on Netflix is the level we're coming into. We're coming into our statistical mean between the 6 month, so the left chart, and the 1 year on the right. And we can see these levels are between the $358.50 to around the $365 level. So again, that is our statistical mean value. So what we usually do is we not kind of put down both of these levels, and again, we'll just line it up or like put kind of a range, because this is usually a range I don't want to be trading in. And the reason for that is that is considered fair value on the stock. So if from a trading perspective, and at least from how I trade, if that's fair value, to me, there isn't much opportunity because I'm playing more of a reversal play. And so if it's at fair value, there is no reversal to really kind of play off. So that was the first thing to note. That is the level we're coming into now. And again, that's why most likely if we zoom out, we can kind of see this is where the momentum started to slow. All green candles until we hit the bottom of the statistical mean range. We get that pullback. Looks like we're testing it again. So more than likely, we will probably push all the way to this 365. So really strong tear today. And again, it's really how does it react to this? If it can break outside of this statistical mean. So we obviously clear through here. We come back, test as a support, and if it can hold 365, we want to see that bounce. And then really once we kind of break that high, most likely we will continue in time to our next deviation. Probably won't get that today because it is a bit more of a big move. But what would that next level be? And in this case, that would be $400. So that would require us to break our 52-week high. And then we'll be coming into obviously our first deviation at $399.97, so $400. And obviously a key psychological level at $400. Now, this is really where I'm personally paying attention to Netflix. If we can start pushing into this kind of level, potentially looking to play a bit more of a short bias play. Now, the only problem I have with Netflix paying at short bias is obviously we can see these deviations are all pointing upwards on both this 6 month chart and also this 1 year chart. We can see obviously they are both pointing up. So when you see this, it means it's uptrending on both a shorter and longer term trend. So obviously if I am shorting this, I'm going to take it a bit less size because we don't want to be going against the overall longer term trend, because again, that is really just going to kind of decrease our accuracy. So if we are trading against this, again, smaller size, but from $400, this is where I'm short bias, and we'll probably look to trade it short bias from there. If we did break that, I'm paying attention to $423, then $440. So those are three key levels we'll note for now, again, because from where we are now, that is still a big move. To hit 400, we still need about a 10% move, and to hit that 441, we still need a 23% move. So on a stock like Netflix, even though it is volatile, again, that is still quite a monster move. So those would be the key three resistances, like we said, where we currently are now. Not something I'm really paying attention to trade, but what we should give us insight into the direction we'll head is right now it's kind of unknown while we're in this range, but if we can break to the upside, come back to test as a support and it can hold, then more than likely we will push it all the way to $400. And again, on the same thing, if we end up failing off this level, coming back below it, coming back to retest it and failing this range, then again, we will probably continue down, and then this is where we'll cover the support levels, which in this case would be $317. If we were to break that, we then have $307. And if we were to go lower, we have $275, $250, and really we'll note one final level at $234. Now, when I'm trading a stock like this, really the ideal trading levels are going to be following the 1 year and the 6 month trend, which in this case is obviously both to the upside. So ideally, I want to be catching these long. And then I'm not a massive fan of playing these first deviations because, again, if you understand standard deviation, 68% of the data should trade within these golden ones, but 95% of the data should trade within these blue ones. So that's really more key. And the green ones would be even better because that's 97 or 99.7% of data should trade within those. So really, if Netflix comes to the downside again, I'm really paying attention to this kind of 275 and below. I think this will be the best opportunity to try and catch this long bias, again following the overall long-term trend, but also coming into high probability bounce/reversal levels. That is my breakdown on Netflix. If you enjoyed the video, why not drop a like and subscribe? But if you want your own stock analyzed, throw that in the comments. And if you enjoyed the video, why not check out this analysis video?